Hello, it's Wednesday, March 14th, 2018. I'm Steve Houston with Compass Communications, and I'm here with Joe Terril of Terril & Company, and we're going to visit a little bit about the investing in markets today. And Joe, we have a new trade policy in place that everybody is talking about that puts targeted tariffs on aluminum and steel, but what's your take on it?
Terrible idea. The potential to start a trade war would seriously harm the world economy. Free trade is good. Any effort to think that you're going to put a tariff on somebody to get them to change trade is not going to work, and you're opening yourself up to problems. I just real quick want to point out two things about it that when you hear at a press conference or somebody in administration say, which they did recently, well, we have an $800 billion trade deficit and et cetera, et cetera. It sounds like they're trying to tell the American people that we lost $800 billion. We did not lose a thing. I run a huge trade deficit with the grocery store. I spend a lot of money with them. They don't do any business with me, but I'm getting value for what I spend there. So we are purchasing and getting value for our imports. It's not as if we're squandering the money or we're writing a check to a foreign country and handing it to them. Then the other thing that I want to point out for people to realize and think is that, and I'll use the example of Mexico, for someone to think we should have balanced trade with Mexico, impossible. The United States is 30 times richer than Mexico. How can they possibly buy as much from us as we buy from them? And in addition to it, half the trade deficit or more are United States citizens going to Mexico on vacation. Cancun and Cabo San Lucas and such. Right now it's spring break. Mexico's flooded with American tourists. That's not Mexico's fault, and there's a difference. The United States is the richest country in the world. We're about 28% of the world's GDP. How can countries that are maybe only 10% of the world's GDP buy an equal amount of goods from us? It's a very dangerous precedent. It's been tried 4 or 5 times over the last 50, 100 years. Every time it ends up in a disaster. So I'm very, very cautious and negative about this new trade policy.
So let me ask you this. Assuming that this is just the first shot off the bow to the world, to heralding the fact that we're going to have a tougher trade policy moving forward, what does that mean for investors?
It means the price of investments will go down because the world economy will deteriorate. The idea that, and I get it, other countries do subsidize their industries. So if China is subsidizing their steel industry and they're able to import steel into the United States, people are, and pay a lower price because it's being subsidized in China. I get it, that's true. But before we can do that, you're going to have to sit down at the table and negotiate this, not just arbitrarily put a 25% tax on it to try and even it out for this reason. In the United States, do we subsidize our farmers? Well, sure we do. And we export grain all over the world. What are you going to do? Put a tax on our exports of grain? What about our national defense industry? We subsidize it greatly. We sell missiles and planes and everything all over the world in competition against other manufacturers. Are you going to come and say, well, the United States, we subsidize our sugar industry in southern Florida in an outlandish way. So we do the same thing the other countries are doing. I get it if you're in the steel business in the United States, but how, through raising taxes on this, are you going to even this up? Bad policy, bad precedent. And
Okay.
it will affect overall investments all over the world negatively if it gets out of control.
Well, Fed policymakers are going to be meeting next week. Are you still neutral to negative on investing regarding that?
Well, before this trade issue started up, and I go back to, 3 to 4 or 5 months ago, we began to see a little bit higher inflation picking up around the world. Central bankers talking about raising interest rates. We've raised them a little bit in the United States. Our Federal Reserve is talking about raising them again at least 3 times this year. Next week, I'll be shocked.
Everybody
if-
expects them to raise it next week, yeah.
They really will. But if inflation picks up more than what we've seen recently, they'll have to raise interest rates more than what's currently being projected. So yes, it bears watching that what is going to happen with inflation, because then that's going to tell you what will happen with interest rates. We at Terril and Company are in the overall macroeconomic view that inflation is going to be a little hotter around the world than what people think. Therefore, interest rates are going to have to go a little higher around the world than what people think. So we continue to be very cautious on stocks, especially bonds, that you don't end up on the wrong side of this move. So if you couple in that as a separate event with the trade policy, unfortunately, it's a really good time to be very cautious on investments and even in some cases be negative on investments.
So given all that, the tougher trade policy, continued interest rates going up, any changes to how you're managing your portfolio?
Yes, we sold some issues and took profits in them that would be negatively affected by a trade war. You can't wait until the trade war starts and then sell. It's too late. 1 or 2 of them we didn't particularly want to, but we just felt that was the right thing to do until this is clarified a little bit more as to how is this going to play out, what's going to be the response of other countries. So that, coupled with the fact that inflation interest rate policy is going a little bit the wrong way, we felt it makes sense to take some profits and sell some things, particularly industrial issues that are tied to trade policy.
Challenging times for investors.
Always is,
Oh.
always is. I just want to stress again one thing. World economies are really doing well right now and will continue to do really well and get better unless a trade war breaks out. Then nobody wins because the exporter doesn't sell, the importer doesn't sell, and nobody sells anything, which would be bad for the world economy,
Yeah.
obviously.
Well, thanks, Joe. It's always a pleasure visiting with you. That's
Sure.
Joe Terril of Terril and Company, independent wealth management with $760 million in discretionary assets under management. Joe, we'll do this again, and
Good to
hopefully
see you,
we'll
Steve.
have warm spring weather when we do it.
Okay, and maybe we'll have a little clarification on particularly this trade policy and how people are going to respond to what the United States is doing already.
Okay. Stay tuned.
Thank you.